Hello, once again, I'm brschultz. Thank you for joining me for another weekly S&P 500 forecast. Next week will be week number 5 of 2024. Today is January 26th, Friday. And so we're seeing the market up at all-time highs, near about 4,900. And, if you followed me for a little bit, you know that I've been forecasting an early February peak in the S&P 500, namely February 6th, plus or minus one business day. So looking for a macro peak in markets between February 5th and February 7th for a hole-in-one 100% hit, but was specifically calling out February 6th as my extreme peak date. So if it hits precisely on February 6th, that would be amazing and spectacular. But basically, some of you also know that I've thought that the Fed would juice markets into pre-Super Bowl 2024, just to go along with. I believe that the Federal Reserve, Jerome Powell, has been purposefully and intentionally manipulating markets to crash into the end of Q1 on even years. Ever since he started the position back in 2018, he crashed the markets, I believe, in my personal opinion, into the end of Q1 2018 and the end of Q1 2020 into the end of Q1 2022. And yes, I believe that he will once again purposefully, intentionally crash markets into the end of Q1 2024. What a pattern, right? Yep, I believe that markets are primarily driven by the Federal Reserve, and so I believe their crashes 97% of the time are on purpose, intentionally, and being manipulated by the Federal Reserve and the Treasury. I also believe that the markets will hit a crazy all-time high in around Labor Day of 2030, and I believe that will be the final macro peak. Much like 2000, I think markets hit some type of supersonic peak around Labor Day of 2030, and then I believe that kicks off the Great Depression. So that would start in about 344 weeks from now. So after the major low, I believe in October of 2024, I think markets are going to be in trouble, sideways to trouble down into October 2024 from this peak that we see in early February. And so I hope that you'll stay with me over the weeks and see how that unfolds. But essentially, I think that markets are going to be suppressed or even in trouble into October of 2024 for a final low. And then whoever's elected president, I think the markets will take off. Let's see. Yeah, that's about it. I have tons of slides today. I've added quite a few slides to the slide deck to provide backing for my thesis for the February 6th peak, plus or minus one business day for a hole-in-one for 100% accuracy. And you know that my presentations have been stating that for some time now. So let's get to the material. Okay, so this is the Great Depression, the start of the Great Depression, I believe. Well, again, started about Labor Day of 2030. I've basically taken monthly data in one of my peak models and projected out where I believe that the macro peak will be in markets. And month after month, I hope to update this chart or maybe swap in and out other macro peak charts to over time lay out my case for the Labor Day 2030 macro peak where markets skyrocket into that point. AI, technology, things of that nature really cause markets to skyrocket after the October 2024 low. I think markets could have the roaring 20s effect or the 1990s effect into Labor Day of 2030. We see markets just on fire and keep ripping higher into some dizzying heights into Labor Day 2030, and then I think the whole thing collapses for 5 to 7 years. I think quite possibly we have a depression from starting Labor Day 2030 into Labor Day of 2035. So I think that would be my fair estimate of how long I think it takes, but I think it's going to be 4 to 7 years of a Great Depression. So I will try to maybe add more charts to this, maybe swap in and out. I'm not really sure how it will go, but I'll try to build a case for it over time. So you'll have to join me and see what I include over the next weeks, and over obviously the next 344 weeks. It'll be a fun countdown. So thank you for joining. Let's keep moving. This is a weekly zigzag model, and I want to kind of use this to drive home why I believe the macro peak is here. As we hit a type of harmonic with the 1700 point level in the S&P 500, my favorite market number is 34. Basically, the 34 SMA is my favorite simple moving average, or it was one of my favorites when I first started studying markets. And so half 34 is 17, and that's roughly where the markets peaked out in 2007, I believe it was 1620 or whatever. So right around the 1700 mark on the S&P, and then we peaked out at 3400 on the S&P in 2020, and here we are, another harmonic, or our length of 1700 points from the last peak. So about 5100 on the S&P 500 could be a perfect extension, or maybe just past it, right? Just to make people think that we missed it, that it's going to blow way beyond 5100, and then the whole thing collapses. So again, I've been saying for some time now that I think February 6th will be the precise date of that peak. Plus or minus one business day would give the forecast 100% accuracy over as I'm trying to see if my model can hit mid-range jumpers or long-term peak calls, right? That would be exceptional. So essentially, you can see here, if you were to freeze your screen or zoom in on your phone, the 1, 2, 3 counts on the zigzag. I've tried to label them so you can zoom in, you can freeze this, you can take a screenshot and try to understand what I'm saying. Essentially, you need 3 touch points on the zigzag. On the top of them are a combination of ups and downs, right? And then draw it out to that black horizontal line. And essentially, that's where major peaks in the markets have been. So essentially, it called out the peak in September of 2018. It called out the peak in January 2020. Called out the peak in roughly December of 2021. And yes, once again, even in roughly August timeframe of 2022. And also, it's calling out for a peak here in I believe it'll be early February 2024. I think the Fed is starting to get jittery. I think the Fed knows that that he's about to implode markets, and I think that's why you're hearing him start to talk more and start to kind of squirm. He knows that he's about to implode markets, and so he's starting to talk more and say that he's going to support markets, and he's going to be there for the markets. So by him saying that, I believe he's already planning on collapsing markets. So that's my prediction. That's the model, what I believe the model's and my interpretation of what the model's suggesting. So let's zoom in a little bit on this chart. So I've zoomed in on the chart. The teal line actually has 4 touch points on the weekly data model. The zigzag, I call it. You can see the jagged points touching that teal blue line. And that's striking, I think it'll be February 6th, will be the macro peak, and then the markets collapse into the next Fed date of roughly March 20th, 21st. I think that'll be the bottom. And then you can also see the green trend line with 3 touch points on it. Essentially, the zigzag line went all the way down to the bottom of the graph. So that basically resets the model, if you will. And then you can see it pops upward. That's 1 up and then 2 down. And then those of you who know that the market likes to move in 5 wave patterns, and 3 being the strongest of the movements, This would essentially say that when this model skyrockets up higher, the markets will collapse. So you can kind of see this happened. You can see how the model pulled down into the bottom of the graph in late 2021, then it popped up and then back down into the November-December timeframe of 2021, and then the market collapsed after that. You can kind of also see it in the 2020 collapse, right? The model went all the way down to the bottom. It popped up a little bit, right, in around September, October of 2019. It pulls back down, so that'd be 1 and 2 down, and then 3 up was when the market collapsed into March. So the whole market just imploded. So it kind of gets that 1, 2, and then punch. Yeah, so I believe that we could see a very drastic decline in markets into end of March, and then I think the rest of 2024 could be pretty choppy as well, and maybe even bad possibly into October. But I think that's where the markets will bottom from what I can see. But I'll save that chart for another day. But in general, that's what I'm looking for. This is one of my Federal Reserve peak algorithm models. It's a 5-minute peak algorithm, and I really like this one because it has so many touch points. Yeah, it's just, to me, it's gorgeous. And I think in the future I will try to show you the dashed lines going out to October, roughly the jagged points down by the green wave, basically on the left side of the screen. You can see that dark blue dashed line going out to October 2022. Essentially, if you take the 2 points, the dashed line in August 2023 and October of 2023, if you touch those 2 points together, basically you get a projection out to, I think, October of 2024. So I think that will be the bottom in the market, will be October 2024. But essentially, I believe that this model is showcasing what I believe to be the final peak, kind of like that 5100 harmonic on the S&P 500. I think that in particular for the 5-minute model, for some reason, when it strikes the top of the graph, it's actually predicting that's the final peak in the market. So I believe that you'll see some kind of supersonic fever pitch run up into the end of day, February 6th, in a perfect forecast scenario. You'd see it move up just huge, right? You'd see from here, from the 4,900, maybe see another 5% or 10% up from here. Just something really big, right? It just squeezes all the shorts out and just gets a nice rocket punch up. Would be, that melt up type of scenario. Best case, I would say, or optimal case, right? To really squeeze out all the shorts and get some type of big movement, in a pie in the sky type scenario, you get like up to 5,300 or something. So like I said, something to get the people that believe it's only going to hit 5,100, to rattle their cage a little bit. So I would hope that it could overshoot by 100, 150 points or something. Again, that could be a pie in the sky type of hope, but that to me, and then it could completely collapse, right? You get the melt up and then it burns out and the whole market collapses. But I believe that this 5-minute model is pretty sweet because, again, I think that this is pointing out the macro peak. And again, if you look at the data, it goes all the way back to 2021. So essentially, you're taking to about 2 years of data, a little bit more than 2 years of data, and it's basically calling out the macro peak with that 2 years of data. So I think it's a nice addition. And yeah, there's some other swirls in there. 1, 2, 3 touch points in the blue wave that you could you can use to predict peaks as well. I think it called out like the end of November, early December peak on here. I think I was looking at that earlier. So it's pretty sweet from that perspective. But again, this ties out to the weekly charts. I guess that's what I'm trying to do, is tie all these models out for the viewer, to give them a full view of my understanding of my prediction. So hopefully I showed you the weekly zigzag of all the 3 touch points and how powerful that's been for predicting macro peaks. And then I bring this in because the touch points are just off the chart on this one. And I found that my models really work the best in the S&P 500. So again, this points out to roughly February 6th. Plus or minus 1 business day would be an insane accurate call for the model if markets peak precisely within that 3-day window. I think that'd be pretty sweet. All right, let's move on to the next chart. I don't think I really updated this one too much. Basically, you can see the 4 touch points on the green line going out to roughly, again, that February 6th peak. And it's pretty sweet too, right? Because if you go back, like I said last time, look at all the 3 touch points on each one of these zigzags. It's called out a major peak in the market, right? So the end of 2021 was a major peak. End of March 2022 or early April 2022 was a major peak. Mid-August 2022 was a major peak. And then mid-February 2023 was a major peak. I think that had, I don't even know if that has 3 touch points. I think it just has 2 touch points. Maybe I just drew that in there for fun. Yeah, because the mid-February 2023 peak wasn't huge, right? But you can see how even the 2 touch points call it out. And then the black line calls out the peak at the end of July 2023. And then it seems that we have 2 types of peaks coming up here. I believe that there will be a peak roughly on February 6th. And then also I think markets sell off into the end of February roughly, into February 20th through 22nd or something like that. And then they bounce back up into March 5th, I believe, is what I'm going to say for my prediction for that peak. So I think there's some type of, I think this is like a 5-wave movement, as you can see, right? Because the markets would peak at the end of December, and they pop up, then down, and then wave 3 up would be after February 6th, and then wave 4 down would be into March 5th, and then wave 5 up in this graph would be into the March 20th bottom in markets. So this is calling out the peaks, but you can kind of see how it's counting waves doing this. But yeah, so I think there's going to be like a 5-wave move from the end of December, essentially, into late March for the final bottom of this 5-wave movement. On to the next graph. And then in this one, I just zoomed in a little bit so you can get a better view of that green dashed line going out to roughly February 6th for a macro peak. And again, and then I think after markets tank, then they pop back up into roughly March 5th for the next peak. As you can see, there's 3 touch points there on this zigzag line. So I think there's going to be, 1987 had a drop and then a pop and then a collapse, and so did 2020 had a drop, a pop, and then collapse. So I think it's going to be very similar to those types of scenarios, where it might have a really bad fall into February 20th through 22nd, then it hits a bottom, then it has some kind of 10-day pop upwards or something for some strength, and then 7 to 10-day pop upwards or sideways movement into March 5th, and then the whole thing collapses again into roughly March 20th bottom, 21st bottom. So, but yeah, I just want to throw this in there so you could get a closer look if you wanted to. So it looks like we made it through the zigzags. There might be a couple of zigzag models again at the end of this for the bottoms, I believe, because those were all peaks. See how hopefully you get to witness how involved all these different models are for calling out peaks, and how much the zigzag really has advanced in its capabilities, or at least my understanding of its capabilities for calling out macro peaks. So that'd be pretty cool if everything ties back out to the zigzags. But again, if you want to see why I truly believe that the markets are going to collapse here, go back and study that weekly zigzag model, because again, we would start wave 3 down on a weekly scale pretty soon if that model is correct. Okay, so this is the 30-minute purple wave, or what I call the my MJ23 wave, named after Michael Jordan, the basketball player. In 2022, this had phenomenal success in calling busts after busts. I think it got like 55 out of something absurd. It was absurd, the record that it pulled off in 2022 for calling busts or swings. So essentially, you get the top of those two purple waves and calling out the peak at the end of July, and then you have 3 or 4 touch points here, all calling a peak roughly around the February 6th time frame. So I think maybe the Fed tries to manipulate it a little bit more on the Fed date, and the markets pop maybe even into that Feb 6 date. I think there's even some type of a political event on Feb 6 that might be there, and markets usually like political events. So you have the Super Bowl advertising money, you have the Fed speaking, you have political events all circulating around this time frame. So I think that's what drives the markets to their crazy peaks. The Nasdaq, the Dow, and the S&P, they hit some crazy high and then collapse after February 6th. If my model is finely tuned and accurate. Let's keep moving on. So this is a 20-minute purple wave peak model. As you can see, the pink, it says peak model next to the S&P500. So I think this is pretty cool because every 3 touch points on this time frame for this algorithm, maybe even 2 touch points, right, has been a major peak. So you can see the ones at the bottom call out the peak at the end of December. You can see how the touch points to the center line called out the end of December. You can see how the touch points go 5 count out to roughly that March 5th peak in markets that I'm calling for, and also the February 6th time frame. So I think it's kind of cool. We'll keep moving. This one's a little less pretty, a little less refined, maybe I should say. It's a 15-minute model. Essentially, you have the 3 touch points for the purple wave, but essentially it's calling out for a peak on February 6th as well. So this one's not as pretty, not as glossy, things of that nature, or glamorous, maybe I should say. But again, it's still synced with the February 6th. I thought that was kind of cool, but we'll skip by this pretty quick. So stick to the ones that really are clear and have a lot of repeatability. Okay, so this is a 10-minute model, but basically I've taken my 30-minute algorithm and applied it to the 10-minute setting. I know that may sound confusing, but it helps me understand how I got to the point I'm at. Essentially, I had a 10-minute algorithm that was not my best work. And then what I did is I kept the setting on 10 minutes and then brought in the 30-minute algorithm to override the 10-minute algorithm, but still have the 10-minute segments input into the data model. So the pivot table would still have 10-minute periods, but the purple wave would utilize the 30-minute algorithm instead of the 10-minute algorithm. So that's why I have it like that. So essentially, the green wave, as you can see, has like 4 touch points. So the first and last point are always key. It needs to just skim off those. So you can see the 1 just skims off there, and 4 skims off there. Hits the bottom rung, right, or again around that February 6th time frame. So I think markets will stay sideways to higher into February 6th, and then break lower. This is the SH model, the 2-minute bottom model, and I've always liked this. It's been kind of cool over the years. It's kind of silly, squiggly, yeah, but it's got some really nice touch points there. 1, 2, 3, maybe 4, probably about 4 touch points. Anyways, this is saying that SH would bottom around the 6th, so that's the short ETF. So again, you'd want the short ETFs to sync with the longs, right, to tell the opposite story. So to me it looks like the short ETF is calling for or forecasting bottom in shorts around February 6th. Though again, I hope that the market hits some kind of supersonic upswing on February 6th, and that would provide some type of huge move upwards to short into near the end of the day. That's my hope. Keep moving. So again, this is one of my original peak models. It's my 30-second peak model for the S&P 500. Essentially, you see the 3 touch points. And this was originally the concept. You needed 3 touch points and to call out a peak. And there you go. So that'd be the three touch points. Yep, I have tons of slides tonight, so keep arguing my point. The thesis is never ending here, so hopefully it's a historic video, and hopefully I can look back in years' time and really be wowed by all these different models aligning and calling out the same day. So hopefully they understand the market correctly. Not that I'm hoping that not as if any human being can crash the markets other than Jerome Powell and Janet Yellen on purpose, or other worldwide banks. Not that some guy on YouTube can by just calling out squiggly lines, right? So it's not as if I can control the markets. No, I just think it would be really interesting if the models are so in tune with reality that they can actually understand that the markets are about to get destroyed by the Federal Reserve and by Janet Yellen. That would be quite entertaining. Yes, and hopefully it would bring in a lot of donations as well, right? Hopefully it'd really wow the crowd. So let's keep moving. This is the 5-minute algorithm with a 30-minute overlaid in it, and essentially you can see how the green wave on this 30-minute scale really seems to call out the peaks in the markets. So the first one bouncing off the top of the 2 green waves, they're going all the way to the top of the graph. That gave you a peak on roughly December 29th, and then a similar type of trend into the peak on February 6th, and also then it seems it would be calling out a peak again around March 5th. So I thought it was quite interesting. So that's why I added it to the presentation material. Let's keep moving. This is what I call my Federal Reserve peak algorithm. Like I said, everything seems to work better on the S&P 500. This scale, the graph is different than most graphs. I think this is 150 at the top. Yeah, it's 150. So anyways, you can see how it skims across all those touch points, essentially to the top of the graph. So again, if it's working properly and efficiently, I think it's calling out a peak on, again, that February 6th time frame. So I think that the S&P 500 again hits its final peak on February 6th. Again, it ties out to that. I think if it does hit on February 6th as predicted, I think it'd be amazing to see that 5-minute peak model that I've already shown. I think it's one of the first graphs I showed hit precisely, and that would be the highest high for the year until we bottom in October of 2024. I think that'd be amazing in conjunction with all these other ones, and then the weekly too, right? As long as the macros hit like dead on, then the minors really, they look good too, but it's really would be evident that the macros are on fire. The macro models would be on fire to call out the macro peaks. So let's keep moving. Okay, so this is the 2-minute peak model, and the reds for peaks, the greens for bottoms. And actually, I think I've updated this in my laptop today, but I just never put it in here. But nonetheless, you can see that teal blue line hitting 3 points on the red wave, going out to roughly that March 5th. And then the orange wave, you can see how the orange wave hits almost 2, 3, 4 points on the red wave, going out to a peak on roughly February 6th, as well as that yellow dash wave that has 1, 2, 3, 4, almost 5 touch points going out to that February 6th date as well. And this also, the beauty of this graph again also demonstrates where the macro peaks are or bottoms are in markets with the green wave. I guess I'll do that another time. But you can see that dark blue in the background called out the bottom on roughly October 27, 2023, and it's also calling for another major bottom in markets right around the Fed date, right around March 23rd through 25th. I think it's more clear on other graphs, but the Fed meets around the 21st, I think. So I think that's what it's calling out for the bottom in the markets. So again, this creates some kind of breakdown in markets and pricing into the roughly where that trend line hits that horizontal line for some reason. I've noticed that I fell onto this theory many years ago, but I still try to incorporate it nowadays if I see it, and it seems to be evident in this model. So again, I think the markets will hit their final bottom in first quarter around the Fed date of in mid-late March for the end of the fifth wave down. Okay, this is a 10-minute model, and essentially this is calling out that the first wave, the wave down from February 6th peak would bottom around the 22nd roughly. So I believe that if markets collapse off the Feb 6th peak, they would hit some kind of bottom at the end of February there around the 22nd of February. So very similar, I believe, to 2020, right? March or February 2020. We peaked mid-February, then we collapsed into near the end of February, then we popped up into very early March, and then did our final collapse. Same pattern kind of showed itself, I think, in 1987. So I think we hit like a mid-late August peak in 1987. It dropped down into late September, then back up into roughly October 5th or 6th, and then collapsed again for a wave 3 down. That's where you got the Black Monday from. So again, the worst of the storm, if it were to unfold, I guess on a weekly scale, it's on a weekly scale you could argue that weekly wave 3 could last all the way into the end of March, into that March 21st date for the bottom, right? So it's really hard to say, but you would think that the macro would be more powerful than just the daily wave 3. So this whole time frame after February 6th could be your weekly wave 3 down into March 20th, 21st. So you could really have some powerful downside that could last and be simply staggering the losses in markets over the next 6 weeks, 7 weeks time. Again, I think the peak would be, again, February 6th, and the bottom would be around March 21st. A number of graphs, right? And I'm still got more to go. So you may have to take a coffee break and come back and watch the rest of it. Let's keep moving. Okay, so this is the SH 1-minute peak model. And essentially you can see that it's calling for a peak around peak and shorts around February 22nd as well. So I think that if markets do collapse off of the February 6th peak, you would hit some type of supersonic low in markets around February 22nd, roughly, causing a hypersonic peak in shorts if it were an extreme case. If it's just a mild to strong case, then obviously there'd still be a peak in shorts, but obviously if markets really sell off, that would be an extreme point. That's really notable. And you can see the other 1, 2, 3 touch points on this graph in the black lines there, the black trend lines. And again, this is a 150 scale, I think, to the top. So very similar to the other graph that you saw with the Federal Reserve. I'll go ahead. Keep moving. Okay, so since the last presentation, I've updated this graph, the 30-minute MJ23 timing wave, and I really like this one. There's a slight time variance in the algo, so that's why every 30-minute graph doesn't look exactly the same as the last one. So I don't know exactly how many iterations it runs through before it looks the same again. Maybe 5, I have no clue. But nonetheless, you really see how beautiful it is here. 1, 2, 3, and then the bottom around October 27th. And then you have a 1, 2, 3 again, going out to, again, the March 21st time frame. So I think, again, that's roughly where the model's predicting the markets will bottom after the beginning of the collapse from the February 6th predicted peak. So I really like this graph. I think the 30-minute. So this is the 30-minute algorithm that all the other algorithms are being fixed with. You saw the 5-minute with a 30 next to it, and I think there's like the 15 or something, or the 20-minute with a 30 next to it as well. This is the algorithm. So the algorithm I built for the 30 seems to work on other time frames better than the ones I built for those time frames. So then basically I just kept the time frame and applied the 30-minute algorithm. So that's what's going on. But you can see how beautiful the 30-minute algorithm is. You can see how the 3 touch points really call it the bottom at the end of October, and you can see how, again, it's already got 3 touch points for roughly the March 21st bottom that the model's predicting. And that's why I believe that the markets will bottom roughly on March 21st. Sorry, I'm a little tired, so if I stutter or babble, I'm trying to stay awake from this. This is a lot of graphs. I mean, it says I have 28 slides to go through. I'm on 21, and 2 of them are disclaimers, and one of them is like a donation page. So that's 25 graphs I got to go through. So it's even a lot for me. But again, hopefully this is a historic presentation that goes down in the history books as being an amazing call and feed for February 6th call out for macro peak in markets. Let's keep moving. Okay, so this is also a 30-minute algorithm. This is, I think it's a little different than the last one you saw, if I remember correctly. But nonetheless, this shows you the trends going to the bottom line, kind of like the same concept I showed you, I believe, on that red and green graph that I showed you, that the trend lines underneath went to the bottoms, the future bottoms. So essentially this kind of just confirms with the green dashed line there going out to the March 20th, 21st time frame. It's just showing that that's roughly where I'm predicting it. I think there's a couple of arrows here that don't belong, so please ignore those, but you can see the trend lines going out to the bottoms on October 27th and then in early March of 2023. And those other lines don't belong there, so ignore those. I'm in no way perfect, that's for sure, so there's going to be an error every now and then. All right, let's keep moving. Okay, so this is a 5-minute model with a 30-minute algorithm for the fix, okay? And essentially taking the purple MJ23 wave going out to the plus 50. You can see how it walked up the purple, the purple wave walked up the teal dashed line. I can't even say that one time fast. Try to say that 10 times fast. Anywho, you can see how it called out the bottom on January 17th, and then markets rocketed. So those of you who watched some of my short-term guesses for the bottom or a sell-off into January 23rd, I think it was. It ended up being on January 24th. So the model was off just a little bit on the 5-minute scale. But essentially what I did to that then is I took the 30-minute algorithm and took that DNA and inserted it into the 5-minute structure. And this is the graph that you get with it. So essentially it provides a different type of structure, algorithm, if you will. And to me, that really looks beautiful. It really picks out the bottom on January 17th, and then markets just rocketed to the moon, right? And likewise for 1027. And so it would seem that the model is picking out March 21st as the bottom, roughly. So, if you plus or minus one business day, you could say right around when the Fed speaks. So, So that's why I continue to think that the market's bottom around that March 21st time frame. Pretty cool, huh? Yeah, I think this is the most slides I've ever done in my life. We'll keep going. Okay, and this is a 2-hour model. Oh, I love this thing. Yeah, I forgot about this guy. This is one of my favorites, actually. I think the 2-hour model back in the day was pretty amazing. You can see that it called out the bottom in October, November of 2022, which I was not the best at the time calling up as the major bottom. I should have been much more on my toes, and that's where my failures started last time. I think I made some amazing calls into February of 2023, and that's basically where I started failing. I think even my mom called for a bottom at the end of March 2023, and then I didn't listen to my own advice, and yeah, that's where I turned into a train wreck. So that's why I didn't make another video since then, because I figured if I can't be accurate, then I'm not going to make videos. I'm just not. I wouldn't want that from someone else. So I figured if I was in their shoes, I would say, get the heck off of YouTube until you can get yourself and your model together and make an amazing video. And I figured, if my timing was horrible, then I should not make any videos. I should wait until the caliber of my timing is at the highest competitive level, that no one can compete with me, or very few can, right? But to make garbage is just, it's an insult to myself. And yeah, so my performance has been horrible over the past year, doing anything other than S&P. So I completely quit everything else, and my sense came back to me, and I'm like, I better get back to just timing the S&P and just forget about everything else. And so this is suggesting that with the 2-hour purple wave, that number one, it called out the bottom faintly, if you will. It's not super clear, right, into the end of October 2023. But I would argue that the bottom that's calling out the end of March of 2024 is very clear. There's a 1, 2, 3, very clearly called out there. You can see the top of the purple MJ23 wave, 1, 2, 3. Yep, striking the top line there and then dropping it, the arrow down, predicting that there'd be a major market bottom at the end of March 2024. So that's why I like the 2-hour model. It can be pretty accurate at times. All right, keep moving here. I think I only got a few more slides to go. This will probably end up being the longest presentation I've ever put on YouTube. I wonder if anyone will watch it all the way through. So if you're still listening to this and the first play, either you've got a late night and you're babysitting or watching your grandkids or something, or you're completely bored and you've got to burn some time, because this is a long video. But hopefully it drives home my point, and hopefully there's a lot of value here. And I hope that it's so competitive that you can't find anything else like it on the internet, and hopefully this goes down as a historically anomaly for how high its accuracy hopefully becomes by calling out the February 6th peak. Hopefully it plays out precisely as prescribed here. This is the original zigzag line. Again, I haven't updated it since last time, or 2 times ago. But again, it just showcases these are 25-point separations in the horizontal, and it just showcases how 2 touch points on the trajectory picks out the major bottoms, right? It picked out the major bottom in mid-May 2022, picked out the end of June 2022, and I think calls out like the October low, but you'd have to go farther back in time, but also calls out the bottom at the end of October of 2023, and then you can see how it's calling out a major bottom near that Fed date in March of 2024. So that's why I believe the Fed is going to crash the market. And I still got more graphs, believe it or not. Let's keep going. Okay, so it's going to be this graph, and then one more, and I think that'll wrap it up. And then there's the disclaimer for the final. So if you've enjoyed this, hopefully you saved the video. Hopefully this may go down in history as one of the best stock market timing videos I've ever produced. I'm sure there's quite a few that have really been amazing, but I hope this is in the top 10. I put a lot of time into this. Basically, I've tried to understand how to call out macro bottoms and macro peaks, and that for the longest time was very difficult for me. But I think hopefully, as you've seen in the video, and hopefully as you replay it a few times, if it proves to be highly accurate, you can see how much work has gone into trying to sync all these different models. And yeah, maybe you're watching this in 2 years from now and you're so impressed with it you still want to donate when you watch this. It would mean a lot to me. It always means a lot to me if someone donates $2, $2,000, $200, $2.35. I don't care. It just always means something to me. So to all of you who've donated or sent me a donation, I'm very appreciative of it, no matter what size it is. The size of the donation doesn't get you anything. Just thanks from me. So obviously everyone in the world likes bigger donations and smaller ones. So I'm just like everyone else. I like like more than less, but at the same time, I'm elated when people even want to donate to me, right? Because y'all hear about the people on YouTube or on social media that get a lot of money in donations and things. Like, that's astounding. So I just want to say thank you to everyone that has donated in the past in 2022. It meant the world to me. And again, if I've wronged anyone, or you feel like I've wronged you by missing 2023, I apologize. I felt horrible. I still feel horrible. I'm not happy with myself at all. But hopefully you see that with that regret, I put in the time to try to really improve my game, my mid-range market timing calls, and so much so that hopefully you see a lot of tremendous value come out of all these. So this is my way of saying I'm sorry, and my way of obviously trying to get back to the top of my game and try to, so quote unquote, perfect my mid-range jumper like Michael Jordan promised to do and swore to do. So hopefully you see similar results as what MJ did in his career. So again, you can see the 3 touch points on the graph, calling out for a major bottom on, again, at the end of February. So that'd be that February 22nd that we looked at. So I think that'll be a bottom February 22nd. And that's also calling out again around the March 21st time frame as a major bottom. There's about 4 touch points on that green dash line. So I think those will be major bottoms. And then we have one more slide left. So thank you for staying with me. It's been 26 slides so far. So there'll be one more here. Thank you for joining me. Yes. So this is a weekly zigzag graph. And I thought this was pretty cool because when you shrink the graph, it has some pretty cool hits. But basically, I blew it up for the sake of trying to show it the best I can. Basically, you have the 1, 2, 3 touch points going into roughly that March 20th, 21st time frame. And then obviously you can see that there's another bust bottom going out into late 2024. That might be the one that's going out to June or maybe October. Yeah, you can also see how the model has gone down and then up. So that's wave 1 down on a macro scale and then wave 2 up. So when this thing takes wave 3 down into end of March, it could be a horrible fall. Yeah, and so I wouldn't normally say that possibly because I don't know that just from this graph. But then when you go back to the first graph or second graph with the peak model zigzag, and you see the 1, 2, 3 touch points for the peak call, roughly on February 6th on the weekly scale, that's when I start to believe that something really could happen here. Tremendous downside. If you've stayed with me this whole entire time, thank you so much. If you like my videos, please share it with other people. Share it on social media. Hopefully it turns out to be an anomaly of greatness, so to speak. And yeah, if you're in the future far beyond January of 2024, and you're so impressed with this that you want to donate even in the future to surprise me, or to congratulate me, or to buy me a beer or a Gatorade, cigar, what have you. Yeah, I hope this is a timeless classic. And if I am dead and gone, if you're watching this in many years ahead, or if I've passed away from some other reason that the Lord's taking me home, and you are my kids, I just want to say I love you so much, and hopefully you've enjoyed this. Obviously, if friends and family as well. If I passed away for some reason, or you're watching this video and I'm no longer with you, yeah, it's this has been my life work, and if this becomes one of the best videos I've ever created, I just want to say that yeah, I've done my best here, and this is what I spent all these hours doing, working on my computer, working on my laptop. And if it's my wife, then sweetheart, love you, and thank you so much for all you've done for me, meant to me, and been there for me, and giving me so many wonderful kids. I'm very appreciative of it. And again, so hope this video goes down in time as a timeless classic. Thank you so much, everyone, and until next time, next week, I think we'll be 1 week closer still to the February 6th predicted peak in markets, and we'll have yet another video, hopefully, to share with you. And I will try to change up the deck every week for the material. What you see, I think I'll try to keep some slide for the macro peak in 2030 in that first slide portion of the presentation. It may be repetitive a couple weeks in a row, maybe a month in a row of weeks, but I will try to over time incorporate more of the prediction of the model for the supersonic macro peak in markets in what I believe to be September of 2030. And then obviously the opposite side of the mountain would be the decline, which I believe will be the kickoff of the Great Depression that will last from 4 to 7 years, ending in, I believe, around October 2035 or maybe even 2037 for a second bottom. You know how markets bottom and they bounce and then they pull back down. So there could be a major bottom in the market around October 2035, and then a wave 1 up from there, and then wave 2 down would be second macro bottom would be in 2037, I believe. So again, if you're watching this and I'm no longer creating presentations or not with you, then at least you know my long-term prediction here almost 12-13 years in advance. Yeah, so thank you so much. I'm brschultz, and until next week, hopefully you've enjoyed this, and thank you for all those who continue to watch. And the accuracy only continues to get higher and higher as we approach February 6th and markets stay strong. So here's hoping that February 6th is the precise peak date of the markets. Thank you again for watching, and the best to you in your trading.